Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Wednesday the 3rd of the 2nd 2021. The time is just coming up to 0500 GMT UK time, Asian session coming to a close, European session just firing up, and our lunchtime is the North American session start. Right, lot to get through. I've written up the initial stuff as usual. So yesterday then, the 2nd of the 2nd, Tuesday, we had a negative opposed driver in the euro at minus 52. So we had front and back door flows going fairly evenly, but ultimately into the pound at plus 36. And then the dollar at plus 20, and the yen was the negative rock at minus 4, and that was on activity of plus or minus 56. Intra-week then, so we're halfway through the week. These are starting to become more relevant. From Monday the open, 1st to the 2nd, to about 15 minutes ago, we've got an opposed negative driver in the euro again at minus 194, front and back door flows. And we've got the bulk of these opposing negative flows going into positive flows the other way, going into the dollar at plus 147, and next the yen complex at plus 54, and the pound staying pretty solid at minus 7 as the negative rock. So we'll just write up the intraday and then we can do some analysis. So intraday, which is today, which is Wednesday, the 3rd, to about 15 minutes ago, so that's the open. So that's basically the Asian session, which is nearly coming to a close. So what we've got yen on its own on the neg. We've got the euro. We've got a little bit of an unusual situation, but I'll explain it in a minute. Dollar pound. So we've got what we've got, plus 5 for the pound, plus 3 for the dollar, 0 for the euro, and minus 8 for the yen, and that's on activity of plus or minus 8. So we've got a negative unopposed driver in the yen, a neutral rock in the euro, and a positive mover in the dollar, and a positive secondary driver in the pound. Right, so let's just look at what's going to knock this around. Right, well, the economic calendar has been sort of chopping things out recently. So some of my earlier weekly comments, some of the things just don't exist anymore and have been put out to a later date, so apologies for that, but that's just the way it goes sometimes. Right, Tuesday, yesterday, late, we had the New Zealand employment data, which came in well above consensus, and it's a 3-month cycle on that. So they've pumped the New Zealand dollar off the back of this, so that was very supportive of the New Zealand dollar. But just remember, the New Zealand dollar as a complex is one of the strongest. I think it's second only to the Swiss franc, so positioning wise that's something to bear in mind. Anyway, today then we've got ADP, which is a sort of preamble for NFP Friday, not always a good indicator, and tomorrow we've got Bank of England rates decision, and Friday NFP obviously. So right, that's what's going to knock us around. It's sort of a bit of a boxy thing. So let's look at the analysis then. So we've had weakness in the euro yesterday, weakness in the euro over the week so far, and we've had varying degrees of other things happening. So let's have a look. And if you go back to where are we? Intra week yesterday. So this was the same time yesterday. The euro was the unopposed negative driver at minus 111, which is an extreme position, and we suggested the euro complex would be at a floor, and yet we still believe that, but it's still having a bit of sort of hockey stick swing on it, overshoot if you like. So let's rub this off and right so let's get this out of the way and look at what we think is going to happen then. So the euro complex is we believe at a significant floor. So that's the trajectory we're looking at on the euro. And if you look at today's flows here, you can see that whilst they're peculiar in that we've got a neutral rock, this is only off the back of very small moves. So if we'd literally blinked and taken the data, you know, a minute or so later, we could have had the euro could have been marginally negative or marginally positive. So something to bear in mind as well. Let's just shuffle this. What's been happening in the wider market then? Equities have been pumped again. So we've had this has been propping the downward path of the yen up with that transmission. Gold has taken a hit yesterday particularly, and this is likely to be off the back of this persistent dollar strength over the week. The dollar has been the positive secondary driver at plus 147. Gold doesn't like a strong dollar. And oil, as we suggested on Monday in the briefing, we thought oil was due for a good ramp up in the pump, and that's part of the reason, not the main reason, but it doesn't hurt why we went short pound CAD. But generally, the market's inability to hold a positive or negative driver over the last week or so shows that there's some pretty messed up larger players out there. This is always a good indicator. They've got some horrible positions. If you think your trading book looks horrible, spare a thought for those people, because they're having to really muck about with their trades. Anyway, so this is what we think is going to happen then. So the euro is starting to going to ramp up, and we think that the euro is going to be the main positive driver shortly, and we're 4 times long euro pound, which is so quite helpful for us, but it's been a pig to trade, but that's just by the by. Right, so we've got euro strength and likely to get de facto dollar weakness now. Just look at the dollar's been pumped this week at plus 147, so we're likely to get dollar weakness. So that leaves us with the yen and the pound. Now the pound, we believe, is at a top. So the pound's at the top. So we've got flows into the euro, out of the dollar. You've got a de facto weakness in the dollar here, out of the pound, and then the likelihood is we're going to get flows into the yen, which is what we've been banging on about all week. So you're likely to see a pullback in equities. So equities are likely to pull back, and then subsequent to that, so if you've got falling equities and a falling dollar, this is likely to give gold a bounce. So I know my board work is a bit scary, but gold is likely to get a bounce. So to summarise then, we're keeping our positions. We're short pound CAD, we're long euro pound, we're short pound dollar, and we're short pound yen. And this scenario is starting to begrudgingly go into our favour. Be careful if you're going to short gold, because we think gold's going to come up. Equities are likely to stall, and that's where we are. So I hope that was useful to you. See you for the daily briefing tomorrow. Thank you very much.